This is a stock that I want to start following more closely than we have in the past due to its short squeeze ability and where the Ortex data sits, as well as institutional investors that have been loading up on call options for GME, but really heading into its next earnings report. Now, this next earnings report is going to be very important for GME. This could be the second consecutive quarter in a row of net profits, or it could be another quarter of losses for good old GameStop. So we're going to get into kind of what is happening here today with GME. Keep this one short, sweet, straight to the point. If you like those kind of videos, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Let me know what you guys are doing with GME. If there's something I am missing, something that should be added to this video, let me know down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video. I did pull the trigger and make a trade today on GME that I think is a very nice, very nice risk to reward profile, guys. So let's get into it. Number one, with stating the fact that GME is positive here on the day. Not a lot of stocks are actually in the green today. GameStop is up about 0.5%. Now, what do you guys notice about this chart and this line? It's very important. This is going to be a major level in which this could actually start an uptrend if you break above this level. And where we are at today is right almost at this line. The high of the day today was $23.30 per share. And that is about 20-ish cents off of this line. This line sits at about $23.58 per share. So about 28 cents off of this line. If you can break above that, going to be very bullish. You would change the overall downtrend into an uptrend. And I think a lot of this recent bullishness with GME has been due to the fact that a lot of institutional investors have also been pretty bullish on GME. That's typically what we have seen in 2023 when companies go from being unprofitable to profitable. You've seen rallies in those stocks, and some of those stock rallies have been hundreds of percents. Now, GME, believe it or not, is at the same price as their last earnings rally put them. Right? Their last earnings rally, the high they hit was about $27 per share. Then the day after that, they were sitting at about $23 per share. $22.58 is where the stock actually closed. So you're a little bit higher than the second day after earnings, the last earnings we got. So roughly in line with where we were during last earnings. Now, I don't know what's going to happen leading into earnings. I think it's more important what happens on earnings, because the markets right now understand that GME was profitable last quarter, or last reported quarter, which was Q4 2022. But Wall Street expects GameStop to fail to repeat its net profit result. Analysts forecast a loss of 12 cents per share. However, this is the street's opinion, should GameStop again surprise expectations and report another profit, we could see a huge jump in GME's share price. Now, I think that's what some investors are expecting, is GME to post another quarter of profits. Now, overall, people are not expecting it. So if that were to happen, it would be a big bullish reaction. And in that case, GME would probably double in value at the very minimum. Literally probably see a 40 to 50% rally just upon earnings alone. And that's because the short squeeze aspect of this trade. Now, a lot of people have not been covering GME as of recently. I am one of them. I was covering it, and then we stopped, and now we're covering it again because the opportunity is in our faces again, right? If we take a look at the Ortex data with GME, the live short interest, meaning the dollars that are currently sold short in GME, sitting at $1.17 billion. starting to creep up again as GME share price has also been going higher. Now, the estimated short interest of free float is 20.46%. That is categorized as extreme. Free float out on loan, 29.37%. Again, extreme. Shares out on loan, 78.45 million. Days to cover. This is the key. This is the thing that is making me the most bullish right now on GME. Yeah, short interest being 20%, yeah, all of that's fine and dandy. But the days to cover being 17 and a half is extraordinarily high. And I think given this data that we're seeing right now, the fact is some of the options are, I believe, not priced accordingly, given the kind of move you could see after earnings. Now, earnings is going to be anywhere most likely from June 2nd to June 8th. We know this. The options are very cheap. Now, days to cover being 17 and a half. I talked about this in the last GME video, but we'll cover it again. Days to cover being 17 and a half means, number one, this will tell you the volume has been low. Now, when volume is low, you tend to get the stock not moving too much, right? When volume comes in, you tend to get bigger moves. You've seen lower volume. You've seen a quite steady uptrend in GME, but it hasn't been a parabolic kind of rally because you haven't seen a lot of volume. Now, when volume is low and then volume picks up and starts to spike on a good catalyst, well, that's going to send the stock up dramatically. Now, the days to cover being 17.5, again, shows you the volume has been low, but it also tells you it's going to be hard for shorts to get out of their short positions, or if they have big short positions, it's going to take a while for them to get out of them. So it kind of tells you how long a short squeeze might last. Something like an AMC has a days to cover over 5, which is good, but that rally could be shorter lived, more or less, than a GME. It doesn't have to be. Depends, obviously, on a lot of factors, buying pressure included, but simply on a short covering basis, it's going to be harder for shorts to get out of something like GME compared to any other normal stock. And that is something that goes overlooked a lot, especially with GME. And you see it being overlooked in the option prices. The options are priced very, very low. And you can see some institutional investors that are taking advantage of this. As we reported in the last video, GME options yesterday were pretty popular, specifically that January 19th, 2024 expiration for the $28.75 strikes. These were all calls that were purchased for about $310 a contract. Institutions bought 170, 225, 285, 250, 300 contracts, and those are individual trades. So they're making a pretty bullish bet here. This is about 20% out of the money right now, maybe a little bit more, with not a whole lot of time left, like, 6 months left? Not a whole lot of time. Pretty bullish bet overall. So I think that is also encouraging. Now, we're going to have external factors such as the meeting with, well, not even the meeting, but a speech from Fed Jerome Powell that will be coming out tomorrow, which will kind of be a big deal for this market. That'll come out at 11 o'clock in the morning, so pretty early in the trading day tomorrow, so you're going to have the whole day to react to it. So it's not like you have to jump into this trade with GME if you wanted to. You shouldn't be feeling FOMO over this. You're going to have some time. Again, GME's not going to report earnings for likely 2.5 weeks from now. So you're going to have plenty of time. But Fed Jerome Powell, in the meantime, could put a dampen on the markets. That's a very real possibility. Stocks such as Nvidia and ServiceNow and Upstart and C3AI and Meta and Google, a lot of your AI stocks seem to be in a pretty big bubble right now, and they're even going higher today. If that bubble pops from now until GME reports earnings, that's also going to change the landscape for markets, for investors. And my personal belief is if those stocks were to fall big time, well, it's going to put a lot of pressure on shorts, and they're going to have to likely choose to get out of their short positions faster than they otherwise would have needed to. So in a weird way, if the markets do fall, it could make GME more primed for a rally after earnings. Now, from now until earnings, the next really 2.5 weeks, the thing that I want to watch the most is this line on the technical basis, right? I don't really expect volume to come in by a huge degree up until earnings. I don't expect the days to cover to move around too much. Don't expect the short interest to move around too much. I really don't expect the stock to move around too much. I think the big catalyst is firmly earnings, whether they are profitable or not, or what their just net loss looks like. If their net loss is not that bad, but it's still negative, that could also be a big catalyst for GME. If you do break above this line, that will be a very encouraging sign. Now let's go ahead and take a look at the moving averages as well, because the moving averages are algorithmically important, right? Once you get to these moving averages, you tend to get reactions around them, and coincidentally enough, around that 200-day moving average is this downtrending line as well. And the 200-day moving average is at $24.03 per share. So if GME can get up to those levels before earnings and break above that, that's going to be a good sign leading into earnings. Now, that's not going to be a tell all be all, but that's kind of what I want to see. Do we stagnate out here? Do we continue to trend up higher? Do we fall lower? Really doesn't matter all too much. I think when it comes down to it, it's, are earnings good or bad? Let's be honest. That's what this trade is here in the short term, guys. So that is going to do it here in this video. Hopefully you learned something. Hopefully we covered information that you did not previously know. If we did, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.